To talk about some commodities. We're going to jump over to our man Teddy Kekstadt. Folks, you can check out Teddy's outstanding newsletter right under the newsletter tab at TFNN. You'll see the Tiger Forex Report right there. $97 a month. It comes with a 30-day money-back guarantee. I always check it out. New issues every week, Monday, and then updates throughout the week when warranted. Teddy Kekstadt, good morning.
Good morning, Tommy. Happy New Year.
Happy New Year. So, why not jump into it? We got some moves, Teddy. We got higher yields. We got dollar strength. What are you looking at in this market? Where do you want to kick things off for the viewers?
Well, the pound is making brand new lows. Yields are pushing higher up. Whatever you want to start with, we can talk about. We got a lot.
Let's talk about yields. They're in focus then. I know they kind of drive, of course, the currency action, but yields hitting 4.73% this morning. We got that jobs number. I know you talked about that jobs number briefly in the newsletter. But yeah, let's talk about yields if we can.
Yeah, well, yields, like I've been saying for weeks, that no matter how much the Fed cuts, the market's going to dictate higher yields, and it's obviously making that very, very clear right now. Even with another half a point, I mean, right now we have another half a point expected over the course of the next 12 months, at least right now. It's kind of a very, I would say, overall consensus. I don't think very many people are arguing that point at all. And if that's the case, right now the market doesn't have that factored in, or nor it doesn't even seem to care about that right now. So, and that's where I would expect you're probably going to have a dead cat bounce, profit-taking rally coming up. I would think this could be. Unemployment, especially years ago, used to be a very good spike day, and I would say that we probably will see something like that occur between Thursday and Friday. So I'd be very cautious as yields stretch their highs, if you will, right now. When we have a pullback, I would look at that as a corrective move. I wouldn't get all like, hey, look, the market's turning, and now all of a sudden we're going to see lower yields going into 2025. I think we'll get, obviously, if there's a pullback, you'll have lower yields for a very short term, maybe lasting maybe a month, maybe two. I would not get any grandiose ideas or delusions of grandeur that, we're going to have very low rates coming 6, 7, 8 months from now.
And I appreciate your input, and I agree with a lot of it. I do, and it's remarkable. I was looking just this morning, Teddy, back to September when yields were so low. We had a 3.5 handle, 3.599. You were at about 3.6, but we had a 3.5 handle September 17th, somewhere around there, which just seems amazing in terms of the run. And even if you get a bit of a reprieve, tough to imagine that you get back anywhere near that type of a level with where this market is and maybe where it should be. Right. What do you think about the dollar? We got the dollar index. I know you're talking about euro, pound, but obviously correlated. The dollar spiking above anything we've seen in almost 2 years. On my chart, when I put it up, and I know I was looking at your letter, man, on Monday. A lot of trends, right? We've been in these trends for a while, of course, since those lower yields. But are we going back to 115 almost, 114.77? I got back there in 2022. What do you think about the dollar at 109.21 right now?
Well, like I said, I think that as long as yields keep on pounding, through resistance and going higher, that's going to help the dollar, obviously. I think it's stretching. I believe yields are due for a pullback. I think it's very warranted and most likely going to happen. I think it's going to happen going into unemployment. I think unemployment claims, and especially unemployment, you're going to see a head fake rally. So that means that the dollar, I would say right now, be very cautious selling into the U.S. dollar over the next couple of days, but look out come Thursday and Friday for some really crazy action. It's the kind of day where you'll see maybe like a big sharp sell-off and a huge rally, and then boom, the market comes back, and starts selling off. So I would say you're going to see a really big whipsaw. I'd be very, very cautious. If you're not in a position, I would stay out until after the number on Friday. And if anything, I'd wait until Monday to get back in the market if you're not in it on Thursday going into Friday. Friday is not a day to be trading against the machines, is what I'm saying. I think on an intraday basis, you'll get just chewed up. So, and then after that, I would say that you'll probably see a corrective move, so I'm not bearish the U.S. dollar. There's too many factors that are in its favor right now. So, I mean, it's not even that yields could pull back drastically. You could see the Fed do a 2-point rate cut. It would not matter even if yields pulled back. The U.S. dollar is not going to fall that much against the euro or the pound because their economies are collapsing. I mean, with what's going on politically and economically in the UK and also in Germany and the EU, those two currencies they're screwed. And also now with the offshore drilling mandate that just got pushed, at least until Inauguration Day, oil is going to be on a bid right now just because of that. And we were talking about now that's a fundamental shift. I mean, I was looking at them just to bid up oil going into Inauguration Day anyhow as a profit-taking play. Now you have a fundamental reason where oil easily could go up to 85, even push, maybe even spike up to like upper 80s before, October 20th, which means you could see gas rally. You could see gas prices go up 75 cents over the next week and a half. That's a very big reality. So if these things happen, that's inflationary. And then what does that mean? Oh, when is the Fed going to cut, right? What happens if these things actually start to manifest over the next few days going into unemployment, right? If all, you could easily see the market look at that being like, well, the Fed's not going to pull the trigger anytime soon as far as cutting when they see inflationary things accelerating at such a rapid rate on a month in and month out basis. So, and you look at the U.S. dollar yen, it's breaking out to the upside because crude oil is firm, yields are firm. Where else is the U.S. dollar yen to go, right? So you have all the currencies right now. The dollar is driving that strength. And I think you're going to see that continue. I'm a buying dip kind of guy into Thursday. I'd watch unemployment claims, and I think on Friday, I think unemployment's going to come out lower. I mean, if it comes out flat or higher, okay, well then I'm off, and then you're not going to see a crazy day then. But if I'm right and unemployment claims come out lower, or if they come out flat and unemployment at least comes out lower, well, that's inflationary. And then that's gonna fit our model.
Hey, I wanted to ask you. We got a question in the den, and I know it translates a bit, but you talk about, and I agree so much, man. It's remarkable the U.S. compared to even you're talking about Germany, the EU. What about emerging markets and how you look? And the question was from our man Jimmy in the den saying, the strong dollar and that impact, whether it's on the currencies, but he's asking just those markets, emerging markets. Do you look at that at all? It's got to be weighing on them. It's pretty remarkable, the strength. I was listening to Bloomberg this morning, and they were talking about, other countries trying to deal with their debt crisis in this environment with dollar strength. And boy, that is a tough one, and that's their deal. But how about emerging markets? Do you look at that?
I do, and I think they're actually in for a lot of trouble over the next probably 6 to 12 months. I think they're going to suffer a lot, without a doubt, because our inflationary issues are hurting us, and I think you're going to see a global slowdown that's going to definitely affect those markets.
Teddy, I appreciate it. I agree with a lot of the takes, man. Thank you so much. I appreciate the takes, man. We'll
Thanks,
talk to you
Tommy.
next week,
Happy
Teddy.
New Year.
Okay. Folks, check out that Tiger Forex Report. We'll be right back.